The Federal Reserve is going to blast the stock market and your wallet on Wednesday. I have all the details and what you need to know right here in the video, so let's get right into it. All right, Wednesday is rapidly approaching and the Federal Reserve is gearing up yet again to blast the stock market and, of course, siphon even more cash out of your wallet as they wrap up their two-day FOMC meeting. So in this video, I want to discuss all the details, what you need to know, and the consensus on what the Fed is going to do with their interest rate policy. So let's get into it as we have a lot to talk about right here in the video. However, really quickly before we do, if you like this type of content and you want to stay updated with everything going on in regards to the Fed, stock market, real estate, as well as anything in regards to money or investing, please make sure to subscribe down below as I'm watching all this stuff very, very closely every single day, and I enjoy sharing these updates with you in these videos each and every day. So again, thanks so much for joining me. Subscribe down below and let's get into it and discuss what the consensus is on the Fed and what they're going to do with their next FOMC meeting. The pressure is on, the heat is cranking up, and we'll have to see what the Fed is going to do here. Now, this is going to be a very pivotal meeting coming on right now because there's a lot of different talk out there right now. Here's what's interesting about it. About a week or week and a half or so ago, the percentage of people out there right now with a 100 basis point rate hike for this coming meeting right now, this coming Wednesday, was sitting at 83%. In other words, 83% of the people said the likelihood of a 100 basis point hike was coming in this week. It was sitting pretty high, right? However, as we sit as of right now, the consensus has dropped quite a bit, and it's almost certain that the Federal Reserve is going to come in and raise interest rates by another 75 basis points. Now, this is what they did back in mid-June as well. That was the biggest interest rate hike, which, by the way, 75 basis points is 0.75%. That was the biggest interest rate hike in mid-June that they did since 1994. So 28 years ago was the last time that they raised interest rates by 75 basis points. Well, it's likely going to be happening once again this time on Wednesday. Another 75 basis points is almost certain as of right now. Now, based on everything that I've been reading about this, for all the people and the consensus as of about a week and a half ago, saying that it was sitting at about 83% that it was going to be a 100 basis point hike, it's unlikely that that's going to happen. Based on everything that I'm reading right now, all the analysts, the experts, the big institutions, big investors, everything like this, and the rhetoric coming out of the Federal Reserve, it sounds like it's going to be almost certainly 75 basis points. But is this going to do anything to inflation? Probably not. Here's the thing. The Federal Reserve is acting way too scared right now. They are not raising rates aggressively enough to do this. All this is going to do is going to prolong the inevitable. They're going to drag this thing out. They got to go big and they got to go fast. The fact of the matter is they're so scared about this thing right now. It's really sad to see grown people that are so scared of their own shadows right now. Seriously, if they want to get ahead of this inflation, they need to go big and they need to go fast. They're not doing any of this. 75 basis points is not what we need to do. In fact, there are numerous countries all across the world right now that have already locked in a 100 basis point hike from their central banks in their countries. However, the United States is one of the only countries out there that has not come forward and raised interest rates by 100 basis points quite yet. Pretty sad right now, considering we are dealing with massive, massive inflation, and that's what their whole objective is right now, is to come in, raise interest rates, and to slow down some of this inflation that's going on right now. Well, if they come in timid every single time and they're too afraid to raise interest rates, just guess what? It's not going to do anything. It's going to just prolong this situation longer and longer. In fact, it's kind of funny because the analysts and the experts that I've been reading about and hearing speak on this for quite a while now have been saying the Fed is just going to drag this out. They're trying to do something, but yet they're not going fast enough. And all this is going to do is just drag out the inevitable, just drag out all this inflation. It's not going to do anything because they're going way too slow. They need to step up. They need to do 100 basis points, a couple meetings in a row, and maybe that'll actually do it. But the fact of the matter is they're not doing that, and it's highly likely that they're only going to do 75 basis points yet again with this meeting rather than the 100 that was in the consensus about a week and a half ago. So interesting. Now, again, we have no clue. Maybe the Fed will come out and throw a curveball for us on Wednesday and say, just kidding, 100 basis points, 1 full percentage point going forward. But It's highly unlikely that's going to happen. Now remember, the last inflation data report that we received just, what was that, a week and a half, 2 weeks ago or so now, came out at 9.1%, right? Incredible. That was the highest inflation that we've seen since 1981. So we're seeing some massive inflation here. Also, the analysts and experts that I've been reading about this and hearing speak on this, they're anticipating that if the Fed continues to come in with these muted responses like this, that we're likely going to see 10% inflation in this country before they actually get a handle on it. So you can see here, you can see exactly where this is going. And again, the Federal Reserve has full control over interest rates, things like this. Let me quickly take a minute here and just talk about what this is going to mean for the average person out there right now if they do come in and raise interest rates by another 75 basis points. Now again, it doesn't really matter if they raise by 50 basis points, 75, or even 100 basis points. This is going to be true across all metrics. It's going to cost more money to borrow money these days. So when they come in and they raise interest rates yet again, basically what this is going to do is just going to raise the cost of borrowing money. So any of these adjustable rate loans out there, any kind of loans out there that has an adjustable interest rate, it's going to jack up. It's going to jack up quite a bit, in fact. So, and again, if you're out in the market right now to maybe buy a new home and lock in a mortgage, you might want to think about lock-in before Wednesday, okay? Again, I'm not here telling you what to do. This is not financial advice in any way, shape, or form. I'm just simply saying this is going to impact mortgages. Now, again, the federal funds rate, which is what the Federal Reserve will be raising, that's basically just the interest rate between banks lending to each other overnight. That's what the federal funds rate is. However, all of this does directly tie into like the 10-year treasury, the 20-year bonds, things like this, and all of that translates into mortgage rates. Okay, so it's all tied together, and it will ultimately translate into higher mortgage rates as well. So again, if you're looking to lock in a loan, or maybe if you are looking to refinance, right now would not be a good time to refinance unless you're sitting at a really high percentage right now. But for the vast majority of people, refinancing a mortgage right now would probably not make any sense because most people are probably locked in lower than where we're currently sitting right now, which is about 5.5%, 5.75%, somewhere in that range as of right now. So yeah, you can see here, interest rates will be jacking up once again quickly. But again, this goes for everything. Auto loans, student loans, personal loans, home equity lines of credit, adjustable rate mortgages, ARMs, things like this. If you have any of these, they're all going to get jacked up. So one thing that I want to throw out there for you, though, is if you do have a fixed rate mortgage, let's just say a 30-year fixed rate mortgage on your primary residence, and you locked in, say, a year ago, a month ago, it doesn't really matter when, 20 years ago, you're locked in. It's a fixed rate. You don't have to worry about that. Unless you go to refinance your loan, you're going to be fine. You're not going to be talking, this interest rate hike will not impact your fixed rate mortgage. But if you have an ARM, an adjustable rate mortgage, then guess what? You're going to be looking at higher rates here very soon. So that's why these adjustable rate mortgages can actually be very dangerous in these situations like this where inflation and interest rates are jacking up really fast right now. This is where adjustable rate mortgages can get really dangerous pretty quickly. So again, not financial advice, just simply telling you some of the things that are going on. But anyway, with all this going on right now, this is going to increase the cost of borrowing money. And that's the whole purpose behind what the Fed wants to do. They want to increase the cost of borrowing money so that we stop borrowing money. They want us to stop borrowing money and using credit, using leverage, using loans, things like this, so that we can stop spending as much, which will ultimately bring down inflation. But the fact of the matter is, this is not doing anything to address the extra $6 trillion that they printed in the last 2.5 years. They need to implement more aggressive quantitative tightening as well, which ultimately takes money out of the system. In other words, it's kind of like the reverse. So usually what they do is they print money, which is quantitative easing, where they print money and plow it into the system, right, by buying bonds in conjunction for printing money. What they do is they buy bonds. So in exchange for the bond, they give money out in the form of cash, and then that cash goes out into the system. Money supply. So what they need to do is they need to reduce the money supply. There's too much money supply in the world, right? Too many US dollars chasing too few goods and services, which is causing inflation. So in addition to possibly raising interest rates, they probably need to consider aggressively increasing their quantitative tightening. In other words, sucking money out, turning on their big vacuum and pulling a bunch of money out of the system, right? Does that kind of make sense? So anyway, you don't really need to know all those details. That's what they're for. But again, that's just kind of the fact of the matter and what is actually going on right now. But Wednesday should be an interesting day. And again, it's going to be a market moving event. However, I want to throw this out there as well. Yes, a lot of us are anticipating, whoa, this big stock market move. Here's the thing. It may be the next catalyst to move the market in whatever direction it was going to move anyway. Please remember, news is simply a catalyst. The market trades on supply and demand. Buyers and sellers. Are there more buyers or are there more sellers? Is there a lack of sellers or is there a lack of buyers? It's basically what it comes down to. Just like any market out there, the market simply trades on supply and demand. News is simply the catalyst to move price to where it was going to go anyway based on supply and demand, okay? So keep that in mind. Don't trade the news, never trade on the news, never invest on the news, but rather follow the supply and demand. Where are there buyers? Where are there sellers? Who's buying? Who's selling? Is it institution or is it retail? That'll keep you ahead of the game and what you need to know with your investing. And of course, with any of your trades, short-term trades, anything like that, just watch. Where's the buyers? Where's the sellers? Join along with them. Provided they're institutions, you probably want to trade alongside the institutions rather than retail. Retail usually takes the wrong side. So anyway, just saying. I know, right? So a lot of stuff going on, but either way, Wednesday should be a market-moving event. There's probably going to be a lot going on, but at this point, we've probably already baked in another 75 basis point hike or possibly even 100 basis point hike based on the news and everything going on right now. And the muted reaction out of the stock market right now, it's highly likely we already have some of these rate hikes already baked into the market. 75 or even 100 basis points is probably baked into this market. But either way, it's still going to be somewhat of a catalyst and kind of trade the news type of event, because that's typically what happens, right? You see the knee-jerk reaction come in and everybody, go one direction or whatever happens. But either way, it's likely going to be a market-moving event, and which may actually kick off the next leg in this market. Whether it's up or down, I guess only time will tell, right? Anyway, hope this video helps you out to give you a better perspective on what's going on right now. Either way, I'll continue watching this just like I do everything else. I'll bring you these updates in these short videos, but Wednesday is going to be a big one, and the Fed will come out and they're going to play with their words very, very carefully. So they like to thread the needle on the way that they speak. If you've ever listened to the Fed and the chairman, they talk very carefully, right? Kind of funny listening to them speak. Anyway, hope you're doing well. Thanks again for watching this. Subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos here on the channel. Until next time, have a good one, enjoy your day, and I'll catch you again later.